Hi all, first let me wish you a happy new year. In this video I cope with the most hot Bitcoin question right now, which is what is the best time to buy Bitcoin? Before starting, let me clarify that whatever you hear in this video are my personal opinions. They are not investment advice and you should not take them as such. Let's start stating the obvious. Nobody has the crystal ball to predict the future. However, we can look back to the past and study the Bitcoin's price movement, and by doing this, try to draw some conclusions that can potentially help us predict the future. In this diagram, you can see the historical Bitcoin price movement against the United States dollar. Every point in the diagram represents the end of day price of Bitcoin. The first point depicts the price of Bitcoin at the 28th of February 2010. The last one is yesterday. The diagram is drawn in a logarithmic scale because Bitcoin's price has increased so radically and otherwise we could not make any sense. For those who do not know, with the term logarithmic scale we mean that the y-axis increases exponentially. For example, from 0.01 it goes to 0.1, 1, 10, 100, 1000 and so on and so forth. It increases exponentially. If we made the same question, what is the best time to buy Bitcoin, each and every day in the past, the answer would always have been today. Let's look at the first day. The price was at 1 cent of the dollar, so the answer would be today. And every other day afterwards, the price was less than what it is today. Therefore, irrespectively of the day we are making the question, it looks like the answer is always the same, today. Now, irrespective of the ever-increasing macro trend, we observe significant moves up and down, like here, here, and here. And we can safely assume there will be more ups and downs in the future, because Bitcoin traders are human beings after all, and that's how human psychology works. One can wonder, is there any way to invest in Bitcoin such that I am not affected by the time that I invested? Meaning that by chance, this time could be a local top or a local bottom. And the answer is yes, such a technique exists and is called dollar cost averaging. This is an Investopedia article explaining exactly what dollar cost averaging is, and I will leave a link in this video description so that you can go read it. Roughly, it states that if you have decided to invest an amount X on Bitcoin, instead of buying with a single trade, you split the amount into smaller pieces and you buy with many small trades over time. Many do this by buying Bitcoin once per month with a percentage of their salary. This way they achieve an average buy price over time that tends to match the average price macro trend. Others do it once per week. And by doing this, they achieve an average buy price even closer to the average price macro trend. And also, they are even less affected by local tops and local bottoms. Those that buy every week frequently do this on Sunday night, as the price frequently drops on Sundays and especially Sunday nights. Therefore, they are benefiting from a small discount. Dollar cost averaging is the investment technique suggested to risk-averse investors. You just buy a small amount at whatever price happens to exist at that moment, and you hodl over time knowing your investment will eventually appreciate. In contrast, investors who are willing to take more risk may want to benefit from local tops or local bottoms. For example, by buying low and selling high. Obviously, the risk in this case is that nobody knows exactly when the top and the bottom occurs. And in the case of Bitcoin, the problem is that when we approach the local top, like here, the price moves parabolic, meaning that each day closer to the top ends with a significantly higher price. And the danger is that you might feel you have to wait one more day and another day and another day, and thus losing the opportunity to sell before the downwards move begins. And even then, you might not realize that you missed the top. You might think this was a temporal correction, and after a couple of days, price might carry on increasing to new highs. At the time this price action rolls out, you can never be sure. Don't confuse yourself by looking at historical data. Now we can tell which was the local top and bottom, but at the time of the live action, nobody could. So, if you don't time your selling correctly, before the downward move starts, you may need to sell at a loss, here or even here. Your other option is to wait for the next cycle. The previous top was reached in December 2017, and someone buying at that day had to wait until December 2020 to become profitable. Now there are three different cases for such a person. First case is that this person buying here at the top, he might have FOMO'd in without understanding Bitcoin's increasing value as a store of value and without understanding Bitcoin's market cycles. This person might be panic selling here or even there at the bottom at a heavy loss. A second case is a person who is aware of both Bitcoin fundamentals and market cycles, but maybe within these 3 years he might need it to sell in order to pay his life expenses or an emergency. That's an important risk one should take into account before investing in Bitcoin. Think carefully what is the amount that you will not need for the next period, which could be up to 3 years. A third case is a person who understands Bitcoin and market cycles and also is in a financial secure condition so that he does not need to sell. Imagine the pressure he feels from his social circle. They might be telling him, "You are a sucker, you are going to lose all your money, price will go down to zero." You know, all these people who do not get what Bitcoin is and talk nonsense. Imagine how mentally strong this person has to be to wait for these 3 years. And this person who bought here at the local top, he's not a sucker. He certainly had bad timing, but he's not a sucker. But if he gives in the pressure and sells here at the bottom, at this point he becomes a sucker. The next question is, are we completely blind or is there a method to estimate the price in the future? The answer is yes, it exists, and it is called stock-to-flow model. This article describes exactly how this model works. The important to grasp is in this phrase, the stock-to-flow is a number that shows how many years at the current production rate are required to achieve the current stock. The higher the number, the higher the price. For Bitcoin, the current stock is around 18.5 million coins, and 900 new coins are produced daily. I'm going to leave the URL for this article down in the description so that you can go read it. I'm going back to the chart now. During the first years, although the model gave a somewhat good estimation, you observe big divergences from the price that the model predicted. However, during the course of time, and as Bitcoin market is maturing, the model becomes a fairly accurate estimation of the price. Of course, even now it does not have 100% success. For example, during the previous local top, the model predicted a price of 5,642, while the real price superseded 19,000, which was more than 3 times higher than the model. This is an indication of a bubble, of course. At that moment, greed dominated the traders' psychology. Periods of extreme greed exist in Bitcoin, like in any other asset. Of course, the bubble always bursts in the end. And similarly, periods of extreme fear exist in Bitcoin, when traders are panicked and selling like hell. For example, at the previous bottom, at December 2018, which was exactly 1 year after the top, the stock-to-flow predicted the price of 6,813, while the real price was less than a half. Obviously, this was a buy opportunity. Now, the hottest question is, what does the model predict for 2021? As you can see here, it predicts a price over 100,000 at a time close to August, September and going forwards. Of course, this is only an indication. We cannot expect it to accurately predict date or price. And this is where the popular 100,000 prediction comes from. All those bloggers and YouTubers predicting 100,000 price, they are all looking at this model. Recently, some of them have started giving higher and higher predictions. One said 200,000, the other said 300,000. Lately, one came out with an 1 million prediction. These numbers are based nowhere, of course, and are selected only to attract your attention. The only guess one can do is that the top is going to surpass 100,000 based on the stock-to-flow model. It is possible to see a new bubble, which at the top could give us a price much higher than the model, like all the previous tops. But we cannot give any guess on the size of the potential forthcoming bubble. The truth is that no one knows. Therefore, we have to stick to the 100,000 model prediction. I should clarify here that we have absolutely no guarantee that the stock-to-flow model will carry on working in the future. The fact that it has worked in the past does not ensure it will work in the future. I wanted to make all these risks clear because we have entered a new bull year where euphoria and greed is expected to dominate market psychology. And I expect that less and less people out there will be willing to bring you the bad news, which means that eventually the market will reach a top and instantly will turn to bearish. This is going to happen with 100% probability. Before closing this video, I would like to show you two other interesting charts from the same website. The first one shows the Satoshi value against the United States dollar. Let me remind you that a Satoshi is the smallest Bitcoin denomination, and one Bitcoin is equivalent to 100 million Satoshi. You will see here that at the first day depicted on this chart, which is the 11th of January 2013, a dollar was exchanged for 7 million and about 600,000 Satoshis. It took it only 8 years to go down to almost 3,500 Satoshis, which is an impressive move. Maybe after 5 to 10 years we could see a dollar exchanged for 10 Satoshis or even one, who knows. The next chart shows how many gold ounces you can buy with one Bitcoin. The first day depicted in the diagram, which is the 1st of January 2011, at that day you could exchange the Bitcoin for 0.0002 gold ounces. Today you can exchange a Bitcoin with 15.3204 gold ounces, another impressive figure. Last, I would like to mention that on both this chart and the initial chart, where I was showing you the stock-to-flow model, each dot depicting the real end of day price of Bitcoin is drawn with a color. The meaning of the color is explained on the right hand side of the chart here. It indicates the number of days until the next halving. I remind you that halving is called the event when the reward in Bitcoins to the miner who produces a new block drops by half. The deep red indicates 1,400 days until the next halving, and then it changes color to orange, yellow, green, blue up to the halving day, then rolls back to red. And if you notice on the chart, the halving day is the day that the color changes from blue to red. A bit after this day, the upward part of the cycle starts. You can see that on every cycle. You can see that here and here. That's all for today. If you found this video useful, please smash the like button, subscribe and hit the notification button to not miss any of my next videos. See you soon.